Hey, I hope you had a great Thanksgiving. You know, too many investors treat their rental properties like a hobby. They hope for cash flow, they hope for tenants, they hope they pay on time, and they hope maintenance doesn't blow up in their face. But hope isn't a business strategy. Hi, I'm Bud Evans. I'm a retired Air Force officer, a retired police officer, and now I'm a full time real estate investor. I help veterans and first responders transition from service to success by building financial freedom through the purchase of rental properties. Before we dive in, do me a favor, hit that like and subscribe button, ring that notification bell so you don't miss the next breakdown. Also, share this with your friends if you don't mind. If you want to scale and protect your investment and actually build some wealth, you're going to have to run your rentals like a business. So today I'm going to break down exactly how to do that step by step using real examples from my companies, my portfolios, my Second Street Property Management, and my consulting company, where I manage dozens of real estate properties for investors just like you across South Jersey. Stick around until the end because I'm going to read through a business checklist for you so that you can write it down and it'll help you implement pretty much everything we're talking about today. So let's get to it. First, you're going to need a foundation. So set up the right one. The first step to running your rentals like a business is actually making it a real one on paper. This means setting up a legal entity, whether it's an LLC or an S corporation. Talk to your CPA for advice. You're going to need a separate business bank account. Do not commingle funds. You're going to need a bookkeeping system. It can just be a Google Sheet when you start out, but QuickBooks, Stessa is free, or something like Buildium when you get bigger. And last, get a dedicated email and a phone line for tenant communications. Too many landlords mix personal and business expenses, and that is a recipe for confusion and a bunch of IRS headaches. When I first started, I got some great advice, and I didn't make that mistake. You don't want rent checks and personal purchases flowing through your same account. When tax season hits, you're going to spend days untangling everything. Make sure that every rental property runs through dedicated accounts and gets tracked in monthly reports. I can now tell you exactly how much profit, expense, and reserve each property has and has had for the last 2 months in a couple of clicks. Think of it this way. If you're running a coffee shop, you wouldn't mix your latte sales with your grocery bill. And rentals deserve the same respect. And that's really how you start operating like a business owner, not just a landlord. Number two, know your numbers. Profit isn't just rents minus mortgage. There's a lot more that goes into it. If you don't know your numbers, you don't have a business, you have a guessing game. So these are the things you should track for every property every month. Gross rent collected, your total rent payments, operating expenses, maintenance, management, utilities, etc. Net operating income, that's what's left over before your debt service. Then track your debt service, which is your mortgage payment, principal and interest. Track your cash flow, what's left after everything else is paid. And that includes a percentage set aside for maintenance, vacancy, and capital expenses. That's going to be your report card. At Second Street Property Management, we build dashboards for owners so they can track their KPIs like rent collection rate, maintenance cost per door, and vacancy days. You can do the same thing on a smaller scale using a spreadsheet or a tool like Stessa or a bigger tool like Buildium when you get there. And again, Stessa is free. It's assets spelled backwards. Here's an example. Let's say your property rents for $1,800 a month and your expenses average $500 a month and your mortgage is $900 a month. That leaves $400 in cash flow or $4,800 per year. Now you know what you're working with, but you're going to want to do some setting aside for some extra expenses when it comes up. Here's what most investors fail at. They don't factor in those long-term investments like roofs, HVAC, or vacancy. That 4,800 looks great on paper until the furnace dies, and now you've got a negative 2,000 for the year. Professionals are going to plan for that set aside by putting away 10% for maintenance, 5% for vacancy. That's how you really survive long enough to thrive. Number three is build your standard operating procedures, your SOPs. Every business runs on systems, and your rentals, they should too. You're going to need a written process for tenant screening, lease signing, move-ins, rent collection, maintenance requests, property inspections, evictions, and delinquency handling. At Second Street, we call this the Second Street way. Every task follows a checklist, and that means any team member or even a property manager can pick up where someone else left off. And here's why this matters. If you don't have systems, you have absolute chaos. If your tenant doesn't know how to report a leak, you're going to find out when the floor caves in. Systems create predictability, and predictability creates profit in the long run. So write it down. Even if you only own one property right now, start building your playbook. I'd recommend using something like scribe.com so that you can just make clicks on what you're doing and it'll produce an SOP. When you buy your second or third property, you're already going to have the framework in place if you do that. All right, number four, manage maintenance like a pro. Control the bleed. Maintenance will make or break your profitability. And I don't mean just fixing things, I mean managing how they get fixed. So here's how I handle it with Second Street Property Management. Preventative maintenance. Schedule inspections every 6 months. We check plumbing, HVAC filters, and safety items. You need a work order system, so your tenants can submit requests through an online portal. Driveway conversations are not the way to do it. Have pre-approved limits, so anything under $250 gets handled immediately and automatically, and anything above that triggers an owner request for approval. Get your trusted vendor network. We use a vetted contractor system. We use Vendoroo, which keeps costs transparent and quality high. If you're self-managing, you can still apply this structure. Use a Google form for maintenance requests like Maintenance Manager or Hemlane. You can use those tools as well. But here's the mindset shift. You're not just fixing things. You're protecting your asset, and you're protecting the relationship with your tenant because you want to keep them there for a long time. Turns are expensive. You want quick, professional maintenance, and that builds trust. Delayed or sloppy repairs are going to cost you more in the long run through quick turnover and bad tenant reviews. Treat your property like a customer-facing business and your tenants like they're your clients, because they are. Number 5, the communication is a system, not an afterthought. You know what kills most landlord-tenant relationships? Not communicating effectively. You can have a great property and fair rent, but if the tenants feel ignored, they're going to leave. So here's what I tell my team. Communicate early, communicate often, and communicate clearly. Veronica takes care of all the external communication to the tenants, and I take care of all of the external communications to the owners. We use automated messages for rent reminders, maintenance updates, and renewals. Tenants always know what's happening and when. If you're a solo landlord, you can do this manually at first, schedule messages through your phone or email, but then you can automate as you grow. On the owner side, if you're using a property management company, demand regular reporting. If I do it for my own company, why wouldn't I expect that from the company that I use in Pittsburgh? You should get monthly updates, not quarterly surprises. In business, silence costs money. If you don't get your payout at the end of the month, what are you using them for? So create a communication rhythm and then stick to it. All right, number 6 is budget, forecasting, and creating the plan for growth. This is where real estate goes from extra income to real business. You need a budget. You need cash reserves, and you need a growth plan. I call that a battle plan or a kill card. You can look at it however you want. At 2nd Street, every property we manage includes a reserve target, a minimum amount held for emergencies or capital improvements. Even for my personal rentals, I recommend keeping at least 3 months of operating expenses in reserves. That's what keeps you from panicking when something goes wrong. And life happens. Stuff goes wrong. Then build out a 12-month forecast. You want rent projections, maintenance budgets, tax and insurance estimates, potential improvements or upgrades. When you plan ahead, you stop reacting and you start managing effectively. It's the same principle I used in the military and in law enforcement. Anticipate what's coming, plan for the contingencies, and execute with discipline. But even the best laid plans, remember, the enemy gets a vote. So the mindset does work in real estate too. Let's look at number 7, which is optimize and scale your systems. So once your rental business is running smoothly, your job shifts from operator to optimizer, from technician to entrepreneur. And what does that mean? It means reviewing performance quarterly. It means running weekly meetings, even if it's just you. It means comparing your properties by return on investment, ROI. It means identifying underperformers. It means automating your repetitive tasks. It means delegation, whether it's a VA or a property manager. When I scaled past 20 doors, I hit a breaking point. I was still doing tenant calls, my own bookkeeping, and my own project management. And I built 2nd Street Property Management to turn operations into systems because I was running around like a chicken with my head cut off. You don't need a company to do that. You need systems that can scale without you being there. Look, as you grow, you get to 50 doors or more, you can use Buildium or Appfolio for full management. You can use QuickBooks or Stessa for your finances. You can use Asana or ClickUp or Trello for project management. AI tools like Real Estate Consultant GPT, the link is in the description. I made that one. It's to analyze deals and automate your admin work. When your business runs smoothly, scaling becomes simple math, not chaos. You got your pen ready? Let's take some notes. We're going to recap how to run your rental property business like a business. Set up your foundation, your entity, your bank account, your bookkeeping. I use Prime Corporate Services for that. Link will be in the description. Know your numbers, cash flow, NOI, expenses, KPIs, and make sure you're setting something aside for all the other stuff. Build systems out, SOPs for every process. Again, use scribe.com. Manage maintenance strategically, preventative, fast, and professional. You can do that with a spreadsheet, or you can do that something with like Buildium or Appfolio. Communicate early and often with tenants, vendors, and owners if you have a property management company. Budget and forecast. Stay proactive. Don't become reactive. Then scale your systems, automate, delegate, and grow. When you treat your rental property company like an actual business, you're going to stop reacting to problems and start managing your profits. That's the difference between owning a property and owning a business that builds financial freedom. All right, if this breakdown was useful to you, hit like, subscribe, and tap the bell so you don't miss the next video. I'm Bud Evans. Aim high, execute fast, and I'll see you on the next one.